Now, in the past, it has proved easier to raise money for a SPAC than putting it to work. What is your timeline to find a company, and what makes you confident that you'll be able to do so in that $1 to $3 billion enterprise value range in the TMT space?
Yeah, so Deidre, we have a database of 1,500 to 2,000 companies, and we've seen the first deck, and we've seen the second deck, and we've been working with these companies for years. And we have about 150 companies there that are SPACable, and about 50 of them that are imminently SPACable. So we think that there's a lot of rocket ships out there that are going to need the rocket fuel that a SPAC can provide.
And what's your timeline, Vivek?
Well, I hope to execute on it very quickly. I hope that we'll have something in the bag in the not too distant future.
Explain the dynamics to us a little bit. We know that there's been a huge surge in popularity for this kind of vehicle, but what happens if you don't find a company? Do shareholders have to approve the deal? Where does the money go if you don't find a company?
Yeah, so the way it works is you have a 24-month shot clock. And if you don't find a company during that 24 months, then yes, the money goes back and you lose the risk capital. But we feel very confident that with the portfolio that we have, that it's rich with companies that are going to seek this. I believe that this is a better way to go out than a traditional IPO. The new generation of entrepreneurs is very similar to the last generation. I was friends with guys like Steve Jobs, and they wanted to move quickly. They wanted certainty, both in terms of the deal getting done and the price. And most importantly, they were great storytellers. Steve Jobs was a great storyteller. The new generation of great entrepreneurs, they too are great storytellers. With an S1 and an IPO, you can't move quickly, there's no certainty, and you can't really tell the story. You can't tell the narrative. With a SPAC, it's a S4 as you're merging when you de-SPAC. And so you can tell the story, you can move at lightning speed, you have certainty that the deal will get done, and also the pricing. You can project future financials. I believe that over the next decade, there'll be $1 trillion worth of public equity that has gone through the SPAC platform.
So it won't just be in times of market uncertainty and economic uncertainty. You think that SPACs are here to stay for the long term? Is that what you're saying?
I believe that this is the way forward. I believe that the best companies are going to choose this as the way to get out. What COVID has done is, as tragic as it has been, it's also been an accelerant. So we're now in 2023. So just imagine what the world would have looked like in 2023, and that's the world we live in today. So everything's happening at lightning speed. Companies are going from 0 to $1 billion in value at lightning speed, from 1 to 5 at lightning speed, and they want to be able to get out and take advantage of the public markets much faster. I also love what's happening because this is democratizing access to the great companies. It's not just the domain of the privileged few to own companies like Google and Airbnb and Uber. Through the SPAC, we get out quickly, and the public can also have ownership in the next generation of these great companies.
Yeah, so Vivek, you did mention that for the right kind of company amid the pandemic, there isn't a lot of trouble. There's actually quite enough access to capital, whether that be private or public markets. Goldman Sachs estimates that completed SPAC offerings currently searching for acquisitions exceeds more than $38 billion. So some would argue that your SPAC today at $410 million isn't enough to do a meaningful deal in the TMT space, especially when you are seeing valuations rise for the kind of companies that you are looking at. What do you say to that? And what kind of verticals or regions are you looking at?
Yeah, and actually ours is 480, but I think it's the perfect size. I think that the great companies, the A-plus companies, the companies that have rapid growth, have a certain critical mass, they're going to be valued in about the $5 billion range. And so for those companies, this is the perfect size SPAC. You can also add a PIPE on top of that. We have blue chip investors like PIMCO, Wellington, BlackRock, who are supporting our SPAC. And with the PIPE, you can actually expand the size of the deal. You don't want the deal, you don't want the SPAC to be too big, because then it causes dilution. So this is the perfect size. It's kind of the Goldilocks zone for the A-plus companies.